The indexes keep printing highs, but underneath the surface, participation is weak and quality setups are scarce. Some traders are catching biotech and semiconductors, others are getting whipsawed out of failed breakouts. The real question isn't whether the market is up, it's whether you are positioned in the few names that matter. Welcome to Market Edge, ahead of the trade.
This is a great organizational setup. Weekly charts on the left, daily charts on the right. What looks good on weekly might not look so good on daily, or vice versa. We like when both time frames look good. Energy. This is the energy ETF. You can always see the name right there in the upper left-hand corner on either chart. And it's just basing here, but notice it's been in a downtrend, hard selling here, rallied right up to the 50-day and backed off. Not a lot of accumulation in the chart. That tells be a little cautious with this ETF, but also energy stocks in general. Dow Jones Internet. Now this one doesn't look too bad on the weekly, just slowly rising up. Had a good week 2 weeks ago. Look at that. This is a tail bar on the daily, but we always defer to the weekly for the bigger picture, better view. It is a little loose right here, though. Look at this reversal bar, and then it drops, and then it runs up and reverses again. It's higher emotions are being reflected in the charts. It needs to settle down a little bit, but the key point is this. The trend is up on the daily. The trend is up on the weekly. We could look for stocks in this group because, again, from a technical perspective, the group looks okay. Dow Jones Internet. You could look at some internet stocks. Something I do like is what it did on Friday. A volume pickup with a price pickup off the key moving average, the 21 EMA or the 8 EMA. That's positive action. And it's near 52-week highs. That tells us a lot of what we need to know. Let's move on. IBD 50 is steadily grinding up on the weekly. It's a little sloppier on the daily. The trend is still up. There's no clean entry on it, but it does sell us something important. IBD 50 stocks, leading growth stocks. The index is acting okay. It's trending up. That's what you want to see. It's not doing this, and it's not doing this. It's moving up. It tells us something important again. It's okay to invest in growth stocks. Just buy at the right time in a good chart pattern. Gold miners are acting fine. I drew this line here as a service. Simple base breakout here, and I'll show you on the weekly what I'm talking about. There it is. Same thing. Weekly and daily, good setup. Lifted off on good volume. Look at the volume pickup on this bar right here versus these bars. They bought it, and then they bought more. And yes, we own it, and it's working. The base pattern backed by volume liftoff is working. It's basing again right here. I have a price alert set. Notice what it did on Friday. It bounced off the rising 8 EMA moving average line. That's the yellow moving line, yellow line. And it did it on a pickup in volume. Starts to take this out, or it definitely starts to take out this line. And I'll draw this just to help you. That could be a new buy or an add-on. So that's one we'll be watching, this GDX. Continue onwards. GLD, now this one's not doing so good. Take a look and you say, well, it's a little sloppier on the weekly. It's definitely sloppy on the daily. Look at the gap downs. You can just see them. They're selling into it. Runs up, drops right back down. Runs up, drops right back down. Same thing here. Tells us something important. Stay away from gold stocks right now. There you go. Let's move on. Hack, cybersecurity. There's nothing there. Leave it alone. Biotechnology's acting decent, and it has been acting decent. Look at the weekly trend and the daily, acting decently. There was a base breakout right here. Just draw this to show you. Here you go. And also I need to share this. This is important. Please don't think the line has to touch to the penny. No, it doesn't. As long as it's getting close to these base years, these tops, that's a plus. That's positive. That's constructive action to make good investing decisions. Biotechnology looks good. You can look at some biotechnology stocks. Key lesson though, buy close to the pivot on all stocks or ETFs, or don't buy at all. There is no edge in making your first buy up here. Pushing through the line, There's the spot to buy, not up here. The chasing price up here can lead to larger losses if it drops, because where would you sell it if it falls below that line? Well, you're going to give up over 2.5 points. You don't want to do that. Moving on. Online retail's acting okay. Looks pretty good here. What's a chunk of this ETF? Oh, a little company called Amazon. There we go. Looks good on the daily. Looks good on the weekly. You could look at Amazon, but you could also punch up IBUY, top 10 holdings, and find other stocks in the online retail sector. Stick with the best ones, though, always. IGV, software technologies, kind of lagging right here. It's not showing a lot of power. Look at the weekly, look at the daily. Needs to start showing some power. What does that tell us? Just be a little careful with some software sectors. IHI is lifting up, but there's no real clean entry on it. You can see, and it really isn't on the daily either. Best thing you can do is you can see this top across here, and I'll show you this line right here. And what I will do as a service is show you what I'm talking about. Picture's worth 1,000 words or $1,000 or more. There it is. But you can see it's got to take a little bit more power just to get up there. It's expended a lot of energy just to get to the pivot. Okay, be aware of that. You want to buy things that are stocks, ETFs that have been consolidating and are relatively close to the pivot price. They don't have to make a huge move to get to the buy point. There we go. Make that a little bigger now so we can see it. Let's continue onwards. Here we go. Mid cap ran up strong, but what was missing on this bar, folks? Oh, look at that, it closed near the highs. There wasn't a lot of volume on that bar. Do you see that? Again, volume is conviction. It tells us other people see it and they're acting on it, and they weren't. Okay, they really weren't buying. And then look what it does. Comes right back. Mid cap needs to start showing some power. Price action backed by buying volume. There you go. Until then, wait. ITA, similar situation, aerospace and defense. Look at these tail bars here. There's also a very valuable lesson. This is color coding your chart bars really helps. Green is a buy bar, red is a sell bar. It's profound thoughts, isn't it? It's kind of like a stoplight. Anyway, just kind of shopping around here, but there's not a lot of buying conviction looking at the price bars and looking at the volume bars. What does that say? Be a little cautious with aerospace and defense. It needs to start taking out this top right across here. I'll draw the line as a service. There we go. Continue onwards. Home construction's acting pretty good. Look at that. Nice move on the daily. Decent moves on the weekly. And it has been telling us, back here. Hey, back here. You might want to look into some home construction stocks. You can see this base right here. It is a little loose, though, kind of whippy, just like a lot of different sectors and stocks in the market here. Continue onward. Growth. Look at that. Look at the trend on the weekly. It's been telling us for a while. Hey, this is the S&P 500 growth index. Yeah, maybe I should look into some big stocks, big growth stocks. Think MAXLIST. Yes, we have been looking. We've been looking for a while. Yes, we have been buying. Yeah. Yes, we own some, and we have for a while. They're working. It was telling us. That's why we do this in Mission Winners. Just being organized and systematized. Small cap, acting okay. Lifted up, backed off a little choppier up here. Notice this. See where it stopped here on the daily? This is why I like weeklies. On the weekly, I'll draw the line as a service for you. Look at that. Runs up here, drops. Runs up here, and backs off. Charts are a reflection of human emotions, decision making. People bought it here and watched it drop, right? Do you think there were some people that bought it there that didn't sell? You bet. And again, on these videos, I try to educate the thought processes of investors. Helps us make better decisions ourselves. Runs up, drops, runs right back up to old highs, and backs off. Look at it. Gap runs up and it gaps down on a pickup in volume. Who do you think was selling there? Well, maybe some people that bought it here, but I guarantee it. People that bought it up here and didn't sell and watched this thing drop and then come right back near those highs, they go, thank heaven, I'm near my price, I'm selling. And they did. There we go. It's a little looser up here. Be careful with it at this point in time. But on a bigger picture, it tells us small cap stocks are acting okay. There we go. Continue onwards. Real estate, there's really nothing to do with it. Leave it alone. Transportation's picking up a little bit. Needs to show some more power. Be cautious with that. Airlines don't look too bad. Do a compare and contrast. That's kind of lagging there on the daily and the weekly. Oh, look, that's forming a cup and a handle right here. You can see it. And I will draw this to help. There you go. Cup with a handle. It's a deep cup. It's V-shaped. Formed a handle. Good volume here. Airline stocks, jets. Maybe looking at some airline stocks or this ETF taking out these tops right here on jets. There we go. Let's move on. Banking isn't acting too bad. You said that doesn't look too bad here. Look at the weekly. Again, as a service, I'll draw this line to help you. These are the things we do at Mission Winners. We teach this stuff. Helps us make better investing decisions. It's a big cup and a handle. Picking up here, similar situation on the daily. Take out these highs with volume. Tells us two things. You could buy the ETF, or you could look at some bank stocks, leading bank stocks. Oh, you can say, how the heck am I going to find them? Just go in there and track down bank stocks. I'd use Market Surge. Looking for the ones that are within 15% or 10% of 52-week highs with a high composite rating. There you go. We systematize it. Mission Winners, that's what we do. It's what I taught at IBD meetups for years. Continue onwards. Insurance kind of lagging. Be careful with insurance stocks. Regional banking's picking up a little bit. It's a little choppy. Be a little careful with regional banks. MDY, mid-cap, rallied up here, okay, and then gave it all back on a gap down. Needs to push through these tops, and until it does, be cautious with mid-cap stocks. Oil services lagging, nothing to do with it. Pharmaceuticals, they need drugs, nothing to do with it. NASDAQ 100 doesn't look too bad. It's been trending nicely. Been trending nicely on the weekly for a while. What has it told us at Mission Winners? Way back here, hey, you might want to look at some MAXLIST stocks, big name stocks, NASDAQ 100 stocks. Yes, we did. Do we own some? Yes, it was telling us to. Price and volume action. There you go. Love this. QQQ, same situation. No clean entry right now. Retailing's picking up, and it has been. Look at the base on the weekly. Look at the daily. Grinding up here. No clean entry on it, but back here it's saying, hey, you might want to look into some, what? Retailing stocks. Leaders. Always focus on the leaders. Cloud computing, too choppy. Leave it alone for right now. Continue onward. Silver, a little sloppier here. Be a little careful with silver. Steel picking up, but again, ran up, dropped. Heavy selling on that bar, heavy selling on this bar. Little loose here. I'd be careful with steel stocks. Continue on. Semiconductors doesn't look too bad. There's no real clean industry on it now, but it's been trending nicely for a while. Look at the weekly. Yes, and it told us, hey, you might want to buy ETF, or you might want to look into buying some semiconductor stocks. That's what we do. Simple. Same thing's true with SOXL, like SMH. Spiders acting good near highs. You can see it on the weekly, and you can see it on the daily. It's fine. Are we involved with some S&P 500 stocks, big name stocks, big stock? Yeah, told us to. Same thing's true with SSO. Solar had a burnout day. I had to say it, I'm sorry. You got to have fun too. Had a good lift right here on a pickup in volume. You might look into some solar stocks. You could punch up, do Google on TAN, okay? TAN, top 10 holdings, and you'll find some leading solar stocks, solar energy stocks. There we go. Small caps, acting okay, not too bad. Did drop down here the last couple of days at a prop on gap down, so a little bit of selling pressure there. Got to be careful with that. Oil, look at U.S. oil. What does it tell us? I mean, do a comparative strip. Well, that doesn't look too bad hitting those highs there, Pat. Well, that doesn't look so good, Pat. I'm with you. What does it say? Stay away from oil stocks. Be careful with that. Aerospace and defense, a little sloppier there. Needs to push through these tops right here. I will, as a service, draw the line just to show you. There you go. And again, what are we looking for here? We're not doing this to look at charts. We're trying to find pockets of strength, areas to delve into more, or buy the ETF. Strength begets strength. Remember that. We don't bottom fish here. I do not. I've never bottom fished, and I've never averaged it down. In fact, this is an important lesson for everybody. Averaging down. You're wrong. Don't make yourself more wrong by buying more. If you keep losses small, you won't have to get in that, conundrum of averaging down. Here we go. Biotech's acting okay. As you can see, biotech stocks. Home builders acting okay. Look at that. Look at some home building stocks. Materials, it's okay, but it's a little sloppier here, not near highs. Leave that alone. And again, I'll compare contrast. Oh, look at XHB hitting highs for the move. There's XLB, well off highs for the move. See that? There we go. Continue onwards. Communication services doesn't look too bad. Basing here, it's a little bit extended though. I'm going to pause here and share something. Buy close to a pivot price. But I can even extend this out. Simple base. Buy close to the pivot price in here, not up here. Don't chase price. Also remember this. This is cancel level 3 and 4. You never buy a full position at one time. You ease into the stocks. That will help you. Energy, leave it alone. Financials, a little sloppier here. Needs to improve. Be cautious with that. Industrials, not a lot of power. Leave it alone. Technology's been acting pretty good. No clean entry at this point in time, but it has been trending nicely on the weekly and daily. And it was telling us way back here when it was doing all this and when it was trending nicely here. Hey, you might want to look at some technology stocks. Yes, we have and we did. We bought. Consumer staples, a little sloppier there. Needs to take out these tops on the weekly and the daily. Utilities, rallied up, starts to fall a little bit on volume, but it's been trending nicely. And I like to see that. It's very, utilities, as you know, very interest rate sensitive. Okay, we like that. We like to see interest rates working for us, not against us. Healthcare's starting to pick up, but boy, oh boy. So it's picking up here in the daily, but then you look at the weekly, there's a ton of overhead supply in the healthcare sector. Be careful with that. Consumer discretionary is acting decent. You can punch up XLY and see what some leaders in that group. Metals and mining acting good, and it has been acting good for a while. Look at the weekly chart. Look at the trend. Again, I will say it. I'm emphatic about this. Riding trends pays more than all the decisions you'll make. Let the stock work for you. Really, it's the truth. How about that one? Do a compare and contrast. Well, that's trending up. Well, that's kind of trending down. Yeah. What does it tell us? In 1 second, stay away from oil and gas exploration stocks. Done. And think about what that does. It narrows our focus. We don't have to look at it. We look at the best of the best. Retail's acting decent. Look into retail. Software's still lagging. Be a little cautious with software. And we go back to the top. Anyway, what's our goal here? Our goal is to find where there's strength. Pockets of strength in sectors or the ETFs that could lead us to buy. Buy strength. Don't buy weakness. Another key point. Focus on buying through simple base breakouts, backed by volume. Volume is key. Volume, again, tells us other people see what we see, and they're buying. Buy more if it continues. If it starts to pause, you sell a little bit into strength, which guarantees a profit because you're not going to let the rest of those shares go down to where you're losing money. And it allows you to let those other shares ride. It lessens risk and it lessens stress using that tactic.
On the surface, the market looks strong. Indexes are near highs, volatility is low, and leadership groups like biotech and semiconductors are holding trends. But under the surface, participation is thin, and breakouts remain hit or miss. Traders who chase extended moves are paying the price with reversals. Those who sell into strength and wait for pivots are staying in control. The key lesson this week is discipline. Don't confuse index strength with broad opportunity. Protect gains when stocks are extended. Manage your size. Wait for clean setups near pivot points. When participation broadens, you'll see it quickly. Stocks will move together and volume will confirm. Until then, patience is your edge. Now let's turn to the max list. These are the stocks that the biggest institutions have to own. If money is going to rotate, we will see it first here.
Here we go. Max list. Apple had a base breakout across here. I'll draw this to help you. You can see it. Here's the weekly. And it's the same line on the daily. And just pushing through these tops. Just running up. You want to see something really neat? I said this at IBD meetings for years. People talk with their mouths and vote with their pocketbooks. It's basing and it pushes through here. Look at the volume surge on that bar, folks. It started to lead up on this bar, but it didn't break out. But then the next bar, it follows through. That's heavy buying volume, folks. And it follows through the next day. Institutions, people bought this stock. How can I say that? It pushed through tops. It closed strong. It did it on a pickup in volume. That's how. And what do we do in Mission Winners? We let price and volume guide us. Now, is there anything to do with it now? No, just let it work. Don't chase it here, okay? It's basing right now. We'll watch this and see what happens. Maybe it's going to form a small shelf for an add-on point. There we go. Notice the price alerts. If it starts to take out the lows of this bar, we'll sell some. That's all. Not all of it, just some. You can say, quantify that statement, Pat. 20%. Lock something in. So we'll see what happens, but we're in good shape. Let's continue on. Amazon started to pick up and then followed through here on a volume pickup on the daily. Look at the volume spike. That's a good buy signal going across these tops. Took out weekly highs too, right there. That's the weekly. Working, price alerts are set. We'll see if this can continue. We'll watch and see. I'll raise that lower alert. Just notice upper alert, lower alert. It's a start. It'll tell us what to do. We don't have to forecast. We simply get in line with the price and volume action. Forecasting can be an ego game, and forecasting is actually more stressful because you're imposing your will on what's going to happen. Like, I think this is what's going to happen. I think this is what's going to happen. Nobody knows the future, folks. I said this at IBD meetings for years. When we accept the fact we don't know the future, we see the future more clearly. Just accept it for what it is. It works. Never argue with price. AMZU, it's a lower level one. Another way to get in, here's Amazon at 230. You can get an AMZU for a lower price. All right, just pointing that out to you. Alibaba, gaps up. All right, they had earnings were in this section right in here, okay? And then it dropped right back down. If you bought the gap up, this is a valuable lesson. I'm pointing this out. If you buy a gap up, always go smaller to lessen risk. Always. And if you bought this, we didn't. If you bought it, you missed this. If you went, or if you didn't buy it, or if you did buy, you went smaller because it was a gap up. That's a real world investing tactic, folks, that works. BIDU, it's a little wide and loose on the daily, or on the weekly. Look at it runs up and drops, back and forth. Does the same thing on the daily. Be careful with that. All right, watch that. It's wide and loose. Indicates high investor emotions. You want to watch that. You want to avoid it. FBL starts to pick up here a little bit. Bit of a tail bar on Friday. It's moving up, but it's not super decisive here. Okay, be careful with it. This is 1.5 times the value price movement on Meta. Way to get involved with Meta, META, with a lower price. A little choppier here. Continue onwards. Google, symbol based breakout on the weekly and the daily, and trending, and it's owned. We've owned it. It was on the key list, and it's trending. Where's it going to go? I don't know. We'll watch and see. Price alerts are set. Is there anything to do with it at this point in time? Well, it's rallied right up near old resistance. I'll show you. This is why we look at both weeklies and dailies. Look at what it's doing. It's moving right up to the old highs. It may be met with some selling up there. Maybe. I'm not saying it will be. But think about it, folks. Again, this is what we teach all the time. It's what I taught at the meetups. It's what I teach at Mission Winners. Charts have memory. What? Really? Think about it. Who's making the decisions? You and me and everybody else. And we have memory. For people that bought it there and watched it drop, comes back near there, they go, Thank heaven I'm near my old price. I remember buying that sucker up there. Yeah, I'm going to sell it. There we go. I'm not saying that's going to happen, but that's also how a handle is formed. Hubs with handles. Takes out this high here. Got price alert set. We may buy more. Lower alert starts to drop. We may lock in more profits. It will tell us what to do on Google. And again, folks, I'm just looking at the daily chart. Nothing fancy here. GS starts to lift up on volume right here. Good volume. And starts to drop again here on a slight pickup in volume. Tells you to be a little careful. Did you buy a full position? No. Remember this. This is canceling level 3 and 4. You never buy a full position at one time. You ease into the stock. Maybe you buy 20%, 30% the first time. You may buy 50% the first time. That's it, tops. If it continues going up under canceling rules, you buy, this is level 3 and 4, you buy 30% more. Continues going up, you buy 20% more. You want to get to 100 shares. 50 shares goes up by 30 shares more. Goes up by 20 shares more. 50, 30, 20 for a total of 100 shares. Or you can utilize and use transpose to percentages. There we go. There's Goldman Sachs. What does it need to do? Well, it fell on a pickup in volume. This needs to show some strength here. You don't want it falling too far back into the base. It does. You sell the rest for a small loss. No day trading, and we're not looking at 5-minute charts. We are basing our investing decisions on daily price and volume action. And the beautiful part about it, you get a good one, and riding trends pays. MasterCard, there's really nothing to do with it there. Leave it alone. Meta, see weekly base breakouts here, here, here. This was a really good one right here. About through here, that was over 100 points, folks. Right in there. There you go. That's what, close to 100, excuse me. That's what we look for. Another base breakout right here on the weekly. Bought it. And note the trend. Trending nicely. And you can see it on the daily. It's just working. Price alerts are set. Sold some into strength. We'll watch and see what happens. If it starts to fall and lose the ADMA, maybe we'll sell some more. It will tell us what to do. If it could base here for about another week and then take out the highs in this bar, these bars right here, I'll draw this to help you. That may be a buy. We'll watch and see. It'll tell us what to do. Microsoft, same situation. There's a big tail bar here. This is a MAXLIST stock, and I want to point out a very valuable lesson for everybody. Be careful buying big gap ups. Look where this opened. Oh, I'm buying it. This is it. Oh, this is where it's going to go. You do that, and you get this, you got a problem. That's why we don't buy big gap ups. I haven't bought a big gap up this century. Just don't do it. Wait. Let me just watch it. It's basing nicely here. Got a price alert set. Show you what I'm looking at here. This needs to base and take out that top. What's one slight negative? Well, two ones. Didn't show a lot of power on that bar, did it? They sold into it. And it's just basing, and there was some selling volume coming into it on Friday. But it's just basing. We'll watch and see. It will tell us what to do, whether to buy it or not. Netflix, grinding up here a little bit. Not a really clean entry at this point in time. By the way, you see the weekly right there? See the weekly there? That base breakout right there? That was easy money right there. And I'll show you on the daily. This line right across these tops. That was good money. That's what we look for. Continue onwards. NVDA, long base breakout on the weekly. Here it is on the daily, marching through here. Same line, by the way, folks, just lifting off through here. Buy it around 147. Right in here, 147 up to 180. That's a good return. That's a real good return. And I have to point this out. Valuable lesson. Again, ride trends. Note the trend up the 21 EMA. Note the trend up the 8 EMA. Sell some into strength. Then you let it work. You let it work. Where's it going to go? I don't know. I have price alert set, upper alert, lower alert. If it starts to lose 21 EMA, I'll sell more. Until then, just let it work. NVDA, similar situation. Tesla starts to lift up here, and then it comes right back in. Good breakouts do not have reversal bars like this, where it runs up and reverses down and closes near the lows. Be cautious with that. That's a valuable lesson. No really clean entry here on the daily or the weekly. Just a little sloppy. I'd like this to base out a little longer and maybe form a handle. That could be a potential buy. Continue on. TSLL is a way to get in the Direxion, get into Tesla at a lower price. By the way, I want to show you something. Here's the Tesla chart. Just take a look at that weekly action. And then look at the daily. Just kind of memorize it almost. And then you go to TSLL. There's a very similar pattern. Boom, boom, boom. There, there. Very similar pattern. It allows us, with TSLL, to get into Tesla at a lower price. I mean, Tesla is, $330 a share. TSLL, $12.50. There we go. I do love Tesla too. Love that stock. Measles a little sloppy there. Be cautious with it. And back to the top. That is an overview of the MAXLIST stocks. As you can see at this time, there's some opportunity there, but they're a little sloppier. So that tells us just if we buy, I'll lessen risk. Don't go too heavy.
And that wraps up this week's episode of Market Edge Ahead of the Trade. Big thanks to Pat Walker for another sharp analysis, and to you for being part of the Mission Winners community. If you found this helpful, be sure to subscribe on YouTube, visit missionwinners.com, and keep your edge sharp heading into earnings season. Stay focused, stay selective, and as always, master your strategy, trust the process, and maintain your edge.